is mine. I mean the report that I have submitted. Thank you. The report follows 4 terms of reference of the PIC Commission of Inquiry, namely terms of reference 1.17, PIC client mandates, terms of reference 1.1, investments and investment processes, terms of reference 1.15, PIC operating model, terms of reference 1.16, governance processes at the PIC. Just to add, there are certain limitations on the report on which the statement is based. In preparing the report, I relied mainly on discussions and presentations given at the PIC Inquiry workshop. While the information is believed to be reliable, I make no representations or warranty as to the accuracy of the information.
The first line of the statement before me, so I have relied solely. So shall we delete solely and put in mainly?
Oh, yes, please. Thank you, Chairman. The report summarizes the major points that emerged from the presentations and is not intended to be a detailed review or official record of all potentially relevant mandate, governance, strategic, operating model, and investment issues from the PIC Inquiry workshop. This statement should be read in conjunction with the underlying report for completeness.
Can we just go back again to what I just referred to, the words solely and mainly? If you say mainly, what else did you rely on?
I relied on the PIC annual financial report for clarification. I also spoke to the chairperson of the inquiry workshop that was held on the 17th to the 19th May 2019 to ensure that I had covered all the material.
Paragraph 11.
Okay. Thank you. PIC in context. The Public Investment Corporation Limited has a demonstrated track record of over 100 years, a feat matched by very few asset managers globally. The predecessor to the PIC, the Public Debt Commissioners, began its work in 1911 and was incorporated in 2004, becoming the Public Investment Corporation Limited, with the South African government as its sole shareholder. Since its inception 108 years ago, the organization's mandate and approach to investing has evolved to include local and offshore public and private markets. The move to corporatize the organization was deemed a critical step towards bolstering its investment skills and agility and to strengthening the PIC's ability to execute its mandate.
I'm sorry to interrupt you here, but perhaps it can be interesting to share a bit of trivia with the Commission. And we share, I believe, an interest in the history of this country. Who was the Minister of Finance during the inception of this organization?
Thank you. Through you, Chair. The Minister of Finance at the inception of the PIC was actually General Jan Smuts.
And do you have a quote from him?
Oh, yes, I do. I do.
Can you share that with the Commission? It's just an interesting bit of trivia, Mr. Commissioner.
Thank you. Through you, Chair. So in 1911, the Minister of Finance, General Jan Smuts, said, the main objectives of the PIC were 1, to place under the management and control of one single authority the management of trust funds, which from time to time come into the hands of the government. 2, to remove from the control of government sums which might, in times of emergency, be applied by a government for ordinary administrative purposes without the authority of Parliament. Thank you.
Thank you. You can then proceed with your...
I was going to say quite interesting.
Yeah, Mr. Commissioner, I think few people in this country do know that General Smuts was at one time in the history of this country the Minister of Finance.
Just to add is that in that code you got something to remove, from the government. Can you repeat that, because he saw the political issues surrounding the PIC even then? Can you just repeat that a bit, please?
Through you, Chair. The second objective reads, to remove from the control of government sums which might in times of emergency be applied by a government for ordinary administrative purposes without the authority of Parliament.
You see? So basically to ring fence the funds that the government shouldn't tap into those particular funds, isn't it?
Yes.
Wow. Interesting. 100 years ago.
Thank you. You can then proceed.
Thank you, Chairman. The PIC is the largest domestic asset manager in South Africa with 2.083 trillion, equivalent to 144 billion US dollars in assets under management as at 31st March 2018, which represents 42% of South Africa's GDP.
Just to go back a little, it would be interesting to find out whether General Smuts had a deputy who chaired the PIC.
Yes, because General Louis Botha, I think he was the Prime Minister by then,
Yes.
after the 1910. So it means that then they said the General Smuts becomes the Finance Minister, but we don't know who was the Deputy Minister.
Through you, Chair, I'm afraid I don't know who that was at the time.
But we'll follow that up as a matter of interest.
Yes. Chairman, it has tremendous financial clout, given it manages the investments of the largest pension fund in the country, the Government Employees Pension Fund, which ranks in the top 20 pension funds in the world on the basis of assets under management. The PIC is therefore integral to the financial well-being of millions of South Africans and a significant driver of the overall economic prospects of this nation.
Can I just ask you on paragraph 12?
Yes.
All right. If a fund is about 42% of GDP, is it quite big for the economy, or is it fine because you got funds in Singapore and Norway that are bigger than the GDPs, Is that 42%, is that too big for the economy, or is still fine, according to your knowledge?
Through you, Mr. Chair, 42% does strike one as a high number. If one looks at Norway, for example, Norway has a sovereign wealth fund. It's the largest sovereign wealth fund in the world with $1 trillion. That is about 17% of Norway's GDP. So this stands out, definitely.
17, are you saying 70?
17%. That is the sovereign wealth fund in Norway as a percentage of the GDP of Norway. Just to say that you will find that South Africa stands out in this particular area where the assets under management in the country are significantly larger than the economy, and it stands out in this respect. I think it's a quirk about South Africa, the big capital markets that have grown historically.
I think you must just double check that Norway example, because I'm not sure, but yeah, I think let's double check that in terms of GDP and the sovereign wealth fund. Yeah.
But isn't there a different question to that, or in addition to that? And that is, many countries don't have a funded civil service pension fund. They pay as you go off the budget, whereas we are one of the few countries in the world that has a virtually fully funded, in fact overfunded, We're above 100%, 108 in the long term, but we just had the presentation on it. And that is a different question. It's not necessarily a negative. In fact, it is something that South Africa has as a significant asset, that you are not reliant on current budget for expending on retirement funds, whereas most countries don't have a funded pension fund for its civil service.
Through you, Chairman, that's indeed the case. South Africa stands unique in this way, and it's a good thing because in times of financial crisis, like you have seen in the developed world, without a funded pension fund, then the kind of conversation that is had is either increasing taxes or cutting benefits. So the fact that we have a funded government pension fund actually is a good thing for this country. I would also add that the life insurance industry is another pool of capital that has also built up over centuries, and those are certainly unique features. The pension fund too, pension funds in South Africa, you can trace the history to the 19th century.
Again, if one takes the penetration of private pension fund and life insurance, it's one of the highest in the world as well.
Indeed.
So that the accumulation of support for different elements of life experience is probably, as far as I recall, the other country that would be close to South Africa, not in terms of the civil service pension fund, but in terms of penetration of life and pension industries, is South Korea.
It is.
Other than that, it's very different to other parts of the world. So it's not simply a comparison to the GDP that is there, it's what do these things fund and finance that in fact is catering for a different stage of life in a different way and taking it off current expenditure in many ways, although it is defined benefit and the government stands behind it.
Through you, Mr. Chairman, it is indeed. So since 1995 to 2018, the PIC's assets under management has grown by a multiple of 22 times, or a compound annual growth rate of approximately 14%, driven mainly by the performance of the local equity and bond markets during that period. The PIC's total assets under management is in line with the total of both the South African life insurance industry and the collective investment schemes or unit trusts. And I refer you to Table 1, the PIC in context, to just get a sense of those startling numbers, I would add.
It's important to lift that out for the Commission. If you can just do the comparison between the PIC and for instance the life insurance and the unit trusts in that table.
Through you, Chair. If one looks at the table, and I've got there the periods 1995 and 2018 as a comparator. In 1995, the life insurance sector was 4 times the size of the PIC in terms of assets under management. Today, they stand shoulder to shoulder with the PIC at 2.1 trillion and the life insurance sector at 2.8 trillion. Also remarkably, if you look at the unit trusts industry or the collective investment schemes industry, in 1995, that was 34 billion. It was the smallest pool of money at that time. Today, it's also 2.2 trillion. So again, standing shoulder to shoulder with the PIC in terms of assets. The PIC in aggregate owns on behalf of its clients almost 1/3 of South African government bonds, more than half of the government's issued inflation-linked bonds, and more than 10% of the publicly traded equities by value on the JSE Securities Exchange for its clients. Further, the PIC is critical to South Africa's economic development and transformation goals, given it is the biggest investor in economic and social infrastructure and black economic empowerment funding through the Isibaya Fund, which had 76 billion rand as at 31st March 2018. A key component of the organization's vision is to be a leader in impact investing, targeting both a financial and social return. Today, the PIC...
Just a question here, and I'm sure we'll come to it at some point in time, but maybe we can deal with it here. COSATU was here yesterday, and they mentioned that we should put money in unlisted sector, of the economy. According to you, given the fact that you have consulted to pension funds, private sector and otherwise, what would be the percentage for unlisted in a typical pension fund? Because I know locally, private equity, and infrastructure funding are there, but what would be a typical percentage for unlisted investments?
Through you, Chairman. Pension funds in South Africa are allowed by regulation to invest in unlisted assets. The number that they are allowed to invest is 10%, and I would say that most of them fall remarkably short of that particular regulatory allowance. And it is something that is beginning to certainly enter the conversation in pension fund boardrooms. And I do believe that you're likely to see an increase in interest, particularly with concerns about returns going into the future. But at this point in time, it remains fairly low. You would probably struggle to find pension funds with exposure of anywhere between the typical exposure would probably be between 2 and 5%, and 5% would be a significant exposure as we talk today.
And why is that so? Because people say we need to invest in our economy and to make sure that we boost the new sectors like the energy sector and other sectors.
Through you, Chairman, I would say two things come to mind. One, there is definitely a need for the industry to come up with the right kind of solutions that make it easier and more accessible for pension funds of all sizes to invest as seamlessly as they would to the listed market. I would also say that another aspect of it is that historically, the allocation to unlisteds was very low until the regulation amended that. So there's also a learning curve that is taking place in the industry as people start to better understand the asset class, the illiquidity premium, and get comfortable with it. You also find that because pension funds will experience withdrawals from time to time, there is a hesitance to invest in something that is illiquid, that cannot be immediately withdrawn when members of the pension fund leave the pension fund. So there are a number of issues that one could trace back to that.
Thank you. Thanks.
Today, the PIC is effectively a hybrid entity. It is both an asset manager and a manager of managers, or multi-manager. It is the largest passive index tracking asset manager in the country. It plays an influential role in financial markets as well as capital allocation in the asset management industry through its asset manager selection role, where it allocates assets to Black-owned investment firms and others. Given this transformative role, there is a compelling and legitimate public interest in the way the PIC is managed. I will now go to this next section PIC client mandates. The PIC has a diverse client base with 23 institutional public sector clients, each with different obligations and stakeholders that represent divergent interests and focus. The PIC levies a management fee to its clients, which differs by the type of assets that is managed. Fees are charged as a fixed percentage of the assets under management. The PIC does not charge performance fees. It is each client's responsibility to determine their fund's objectives, their investment philosophy and strategy, and to determine the strategic or long-term asset allocation, which is the most important determinant of investment performance. The investment mandate formalizes the relationship and expectations of the client and the asset manager and is the reference point for ongoing performance monitoring and evaluation. The investment mandate documents the client's risk preference, performance objectives, including benchmark and return targets and investment time horizon. The PIC...
Sorry, can I stop you there, please? And maybe we should deal with this here. I think it comes up also. Paragraph 21, 22, and 23. And please tell me, if you cannot answer, just tell me. And if you can, please do. We had a COSATU here yesterday, and we spoke about client mandating process, all right? That asset, pension funds, they got a way in which they can control the relationship between themselves and the asset manager, all right? Say ShopRite putting money in Old Mutual Asset Management, they got a way they can control that company. We had complaints from COSATU and from some group called AMA-GP about how GEPF and the PIC goes about managing their funds. And they felt that they were powerless to influence GEPF and the PIC. Is there a way in terms of a mandating process where you can control the asset manager or make sure that they invest in a proper way? That's the question.
Through you, Chair, I clearly am not in a position to talk to the internal workings of the board at the GEPF level. But I can more generally perhaps say that at the board, collectively, the board members would talk about governance and set their objectives. And that would be a collective activity because they are the governing fiduciary. They would then document that in an investment policy statement. This investment policy statement would form the basis on which they then jointly with the PIC or any asset manager for that matter, start to draft the investment management agreement where the mandate would cover the risk preference, the investment philosophy that will be followed, and set out the asset allocation ranges that the manager must then adhere to. So the voice of the trustees should cascade from the objective setting process, the asset allocation process, documented in an investment policy statement and used to codify the contents in a mandate.
And if stakeholders believe that, their monies are not being spent properly, and they see in the papers that there are some investments which are not great, how can they, you look at the GEPF, it's a stakeholder to the PIC, but the pensioners are not necessarily direct stakeholders, But how can they have a voice? Is there a way in which through the client mandating processes, either the GEPF or other people surrounding the GEPF can have a voice? if they are worried about the investments?
Through the chair,
And if you can say yes, if you can't answer, let's make a move on.
I think that the internal workings clearly, if there are parties to the trustee board that feel that their voice is not heard, there's an issue there that they need to address. But the whole process of understanding, planning, implementing, and monitoring is one that at the governance level, at the trustee board level, that they should do, and they should contribute to that conversation. So I think that is what I will say around that. There's a way that they should be able to have their voice heard. But maybe additionally, I would say that, and it comes through in some of the considerations that perhaps can be looked at into the future, the need for transparency would probably help. So, and I think there's some ideas that will come later around that will just help the entity build trust with stakeholders, because there's clearly a deficit.
Thank you.
Suppose in the case of the GEPF, it is the main body that should be vigilant and keep watch as to what's happening to the monies that they put in the PIC. Isn't it so?
Chairman, it is so.
And just to add is that, I mean, typically within the private sector, isn't it that if you don't invest properly, the pension fund fires you, I mean, as the asset manager, but it's not as easy in the relationship between GEPF and the PIC.
Through you, Chair. In the private sector, it's very similar. There would be a process of coming to an understanding what the investment philosophy is of the fund, the strategic asset allocation, the manager selection process, and the manager would be held to account on a number of things. And if they do not adhere to the mandate, that could be one of the reasons why the client might decide to change a manager. There are many reasons why that would be the case, but certainly if they do not adhere to the mandate, either because of negligence or just non-compliance, that is certainly something that could make the board reconsider the appointment and, yes, move the assets. The GEPF accounts for almost 90% of the assets by the PIC. Table 2 below shows the composition of the PIC client base. The following highlights are therefore based on discussions at the PIC Inquiry workshop, following presentations by the Compensation Fund, the PIC, and an independent legal expert without access to the terms of the GEPF mandate. The nature of a pension fund. Pension funds are special purpose legal entities through which people make provisions for retirement. Most pension funds in South Africa are regulated under the Pension Fund Act of 1956. A few are exempt. These include the GEPF, the Post Office Retirement Fund, and Telcon Pension Fund, and the Transnet Pension Fund, all of which are legal entities established by their own particular statutes and to which the state has or has had substantial direct and contingent financial exposure. Pension funds are important vehicles for the provision of social security. They form a critical part of the way in which the state fulfills its constitutional obligations to provide social security benefits. This can be through an occupational fund where employees together with employers contribute to savings by allocating a portion of their remuneration to the pension fund. To encourage South Africans to save for retirement, the government provides tax incentives on the contributions to pension funds, which has boosted the level of participation in occupational funds in South Africa relative to the rest of the world. Pension funds have their own interests, which can be entirely separate from the interests of their members, the employer, and the dependents of members. The board of a pension fund must exercise the powers which belong to the fund to deliver the pension benefits in the very long term. The GEPF aims to ensure the financial sustainability of the fund into the future while having a large exposure to the South African economy. How the assets are invested to meet future liabilities is therefore an important consideration. The GEPF is a defined benefit balance of costs pension fund to which the components of the national and provincial governments in their capacities as employers of its in-service members are required to contribute at rates determined from time to time with due regard to the results of the triennial valuation of the fund. As at the last valuation, the GEPF was fully funded and able to meet its obligations.
When was that around?
I am aware, and it was mentioned, Chairperson, I am aware, and it was mentioned at the workshop that this was indeed the case. I have not seen the report myself.
Well, my colleague says it was 2018.
Yeah, we got the report from them.
Okay.
Yeah.
Thank
They
you.
did a presentation, Mr. Pinard from Alexander Ford.
Yes, yeah.
Thank you. Chairman. The government stands behind the fund as the guarantor of the defined benefit pension. As the largest client to the PIC, and by virtue of its sheer size, a failure of the PIC, or by extension, a failure of any significant investments made on behalf of the GEPF, would expose the South African government to material financial vulnerability.
Did you skip 35, paragraph 35?
Yes.
Can you just place that on record, please?
Okay. Chairman, the GEPF board is required to determine its investment policies.
No, sorry. Can you go back to paragraph 35?
This is not dissimilar, it starts with that, to life offices.
But I can just mention that the witness did deal with 35, Mr. Commissioner.
I didn't get you?
She
read it.
She can repeat it again. She did read it, yes.
All right.
Okay. Okay. We didn't hear that.
Okay. Chairman, 35.35.
You can go to 37.
Okay, I can go to. Okay. The GEPF board is required to determine its investment policies in consultation with the Minister of Finance and may not make any changes to the policy without the Minister's approval. The Minister, who has the right to appoint half of the GEPF board members, has a veto right over the changes to the GEPF investment policy that may negatively impact the government's financial obligations towards the fund as the guarantor of the defined benefit fund. The GEPF board is not expected to have expert knowledge on all aspects of the pension fund, and may take on and rely on expert advice as needed. It can also delegate the management of investments to the professionals. The PIC invests the majority of the funds.
Sorry, can I just ask you a question on that, on paragraph 38?
Yes.
Because, and I'm assuming this has come out of the workshop,
Yes.
but was there any discussion in the workshop? Because normally a board is that you require not every individual to have the knowledge of everything, but the board as a whole to have the knowledge. And this is somewhat different to say, well, we don't expect you to know that collectively. And I would be interested if there was discussion about that, because one would assume we've put a board together. I mean, the board comprises 10 to 15 people. one would assume you would put it together so that there is knowledge in the board collectively of everything, because otherwise the board it doesn't stop anyone outsourcing. A board has every right to outsource information or management or whatever. But that seems a little bit of a contradiction to what the thinking about comprising a board would normally entail. Was there discussion on that in the workshop?
Through you, Chair, it was mentioned by the legal expert, and I may not have, in my taking notes, maybe I did not capture the essence of it, but I think you're right. The board must have some capacity to deal with the issues that they face. At the same time, they will deal with the high-level issues of governance, objective setting, and then be able to work with other fiduciaries who are experts on and can deal with the day-to-day matters of the management and direction in the execution of the instructions of the fund.
Because if you have a board that by its structure does not have the levels of competence that are required in a collective manner, then in many ways you are outsourcing your responsibility to a third party, which you can always call in expertise. There's no question a board can do that. But if you structure your board without the expertise, then I think it would be a bit questionable. So it's just struck me as a bit of a contradiction in terms there. But obviously one would have to think about that, and perhaps we can, Advocate Lubber, look at that as to whether there is something in the GEPF's terms of reference or the relationship and agreement with the Minister of Finance as to whether there is that kind of exemption to the board.
Yes, thank you, through you, Mr. Commissioner. That is one of the issues that the GEPF will be requested to deal with in their presentation to this Commission.
Can I add there? Yeah. And yeah, I think it's something we need to look at. But when you check at the GEPF board, sort of, as you said, half is employee representatives, and the other half is employer, And on the employer part, actually, you do have one actuary there. I think you do have a chartered accountant. So it looks like you got more leeway on the employer side than on the employee rep side, because they sort of probably mandated people. But the last time I checked, there were some people with technical qualifications on the employer side, isn't it? I mean, do you recall that, Ms. Waume? Anything? No?
Through you, Chair, I am not familiar with the composition of the GEPF board.
But aren't you saying in paragraph 38 that that the GEPF board is not expected to have expert knowledge? It's not saying they shouldn't have any knowledge at all, but they should have knowledge. But what you're saying is that they're not required to have expert knowledge, and for expert stuff they can outsource and get an expert to come in. Isn't it so?
Chairman.
Sorry, Chair, if I can also, it's further qualified with great respect. They're not to have expert knowledge on all aspects. I think that is the qualification.
Chairman, the PIC invests the majority of the fund's assets across equities, bonds, and property, predominantly on the JSE Securities Exchange. It can invest 10% split equally between offshore investments and in the rest of Africa, ex-South Africa. Part of the PIC mandates from its clients is to invest in developmental investments which aim to stimulate economic growth and transformation. This is in recognition that without adequate infrastructure, a fundamental requirement of a growing economy, the fund's investments in other parts of the economy could be less effective. For example, if goods cannot make it to the ports or there's insufficient electricity to power the economy, this hampers growth. The Isibaya Fund invests in alternative assets, including private equity, infrastructure, direct property, and impact investments to varying allocations based on the client mandate. Importantly, impact investment is not philanthropy or grant funding. It must generate a financial return with a social impact. Compensation Fund. The Compensation Fund briefly shared insights into their investment strategy and policy that informs the basis of the investment mandate with the PIC as well as the performance of their two funds. The Compensation Fund collects premiums from employers and invests them with a PIC according to its investment policy as approved by the Director General of the Department of Labor. The investment objectives that have been agreed between the PIC and the Compensation Fund as part of the investment mandate are as follows. The primary objective, to ensure capital preservation of all assets. The secondary objective, to ensure that after providing for liabilities of the fund, that the investment growth is sufficient to cover the future benefit improvements. The investment return objective is to achieve returns in excess of headline inflation plus 3.5% over a rolling 2-year period. The Compensation Fund has two investment portfolios managed by the PIC, which are the Compensation Commissioner portfolio and the Compensation Pension portfolio. Figure 1 shows a snapshot of portfolio returns on the two portfolios versus the investment target of inflation plus 3.5 over the past 24 months. Just for clarification, in figure 1, the CPI plus 3.5 target is in the orange and the portfolio return is in the gray.
Just a question there, or are you continuing there? Okay, on the diagram, can you explain further in terms of the performance there?
Through you, Chair. The diagram shows that the portfolios have missed their inflation targets during that snapshot, and I want to emphasize that this is a snapshot, so it doesn't adequately provide you with a sense of how the portfolio has performed over other periods, and it could well be that it performed better, but this was the performances that was provided at the workshop.
So are you saying that 8.2 versus 7.3 that the PIC didn't perform to the target, isn't it? Is that what you're saying?
Through you, Chair, I am saying that in this particular case, which is a snapshot, that the PIC was actually behind its the target that has been set by the client. For both funds, the Compensation Commissioner's portfolio and the Compensation Pension portfolio. Table 3 compares the actual asset allocation to the strategic target or long-term asset allocation as set out in the investment strategy. So on Table 3, the second column shows you the actual holding, the actual asset allocation, and it is compared to the strategic target and the range. And you will see that there are some deviations there from the range that has been supplied, and certainly the long-term asset allocation. Deviating from the given asset allocation ranges as outlined in the investment mandate can add to a fund's risk of not achieving its objectives and could signal concerns with the asset manager's internal mandate monitoring process. When appraising developmental assets, the Compensation Fund looks at financial performance against expectations as well as social impact. In 2019, of the 17 developmental investments made on behalf of the fund, 8 were performing in line with the expectations, 6 were distressed with low prospects of recoverability of the fund's investment, and 3 were underperforming with significant variance to budgeted revenue, governance failure, and breach of contract. Investments and investment processes.
Yeah, can I just ask there, two questions? So in paragraph 50, are you saying almost 9 out of 17 investments were not performing to satisfactory level? More than 50%?
Through you, Chair, based on the information provided in the compensation fund presentation, it seems like there were 9 investments that perhaps were on the watch list or a concern because they did not meet, they were not performing in line with expectations.
All right. And then on table 3, you mentioned there's a line there, cash and money market. The actual was 16%, the actual money, but the strategic target is only like 5%. Yes. How do we read that one then? Because the actual is not what is targeted at, like, you know.
Through you, Chairman. On the face of it, it certainly looks like there's a deviation from the strategic asset allocation. It's not clear to me why that was the case, but in this kind of a situation, one would expect that the asset manager would have a conversation with the client to explain why this deviation has taken place.
Yep.
Investments and investment process. The main.
But, I'm sorry, before you go there, in 49, I think the bottom line is it was actually a very poor performance.
Through you, Mr. Chair, the bottom line is certainly that this was a concern. There was no detailed information on returns or further attribution to explain this, but certainly what this could do is flag to management that maybe they need to take a look at what is going on in this particular area, that's internally. And from the client perspective, maybe to have a conversation to understand the process with which the investments are made and the extent to which the process is followed.
But I think to put it in the proper context is when you look at the investment objectives that have been agreed between the PIC and the compensation fund, and the primary objective is to ensure capital preservation of all assets. And it seems to me, if I read 49, in 6 cases, there are low prospects of recoverability of the investment. They're going to lose the capital. Am I correct?
Through you, Chair. Certainly on the face of it, that's what it looks like. There was not enough detail to be able to understand if there's something further that we should appreciate from this. But suffice it to say, the way it is written, on the face of it, it certainly looks that there were a number of investments where they might not do as expected.
And Advocate Lube, if you can remember, we had a PMV here, Ms. Solomons, and a spreadsheet showing that just above half of the investments are doing well.
Exactly, thank you, through you,
Yes.
Mr. Commissioner.
So the main focus of this section of my statement is best practices shared by the participants of the PIC Inquiry workshop. The PIC investment philosophy is underpinned by 2 broad objectives, namely generating financial returns and sustainable environmental and social governance impact. The PIC believes that a focus on the following 6 principles contributes to value-added performance. Risk management, the efficient use of risk budget by avoiding risks that do not provide commensurate returns and targeting a low volatility portfolio. Diversification, well-diversified portfolios to produce a stable distribution of returns. Time horizon, investment strategies will generally be long-term in nature and will avoid ad hoc decision-making based on short-term factors. Market efficiency, Markets differ in degree of efficiency at macro, sector, and asset level. Investment strategies will reflect a mix of active and passive investments, with passive investments being overweight in more efficient markets. Valuation and analysis. Valuation and analysis based on fundamentals generally produce superior return risk results. Investment strategies will focus on fundamentally based processes. Cost. Cost management adds significant value to production of excess returns. Investment strategies will actively seek to minimize overall transaction costs. The PIC therefore combines index tracking and active management investment strategies to deliver attractive risk-adjusted returns in order for its clients to meet their obligations. The institution produced results broadly in line with or above the relevant benchmarks for its clients over the past 10 years to 31 March. See Figure 2. So I'll just talk you through Figure 2 briefly. Figure 2 shows performance over 10, 5, and 3 years. I apologize, there's a typo in the heading. And if one looks at 10 years, and that's the blue bar, you will see the blue bar is above the zero line in most cases, in the case of 4 of those clients, and that would show that in those instances, the PIC outperformed the prescribed benchmarks, which would differ by client. In all cases except for the GEPF, where there was a small underperformance over a 10-year period. I think it's important to note that past performance is not an indicator of future performance. And relative performance...
Sorry, I certainly can't hear. I don't know, it's not 11. I think let's take a break.
Mr. Commissioner, is it perhaps a convenient time to take the tea adjournment?
I think so. I think so. Shall we adjourn until 20 past? Right, we'll adjourn until 20 past. Ms. Maume, you're still under oath?
Yes. Yes. Chairman, the majority of assets are invested in listed equities using a passive or index tracking approach, with a smaller portion managed on an enhanced index basis. Generally, strong equity markets have resulted in good investment returns for passive investment strategies. Tracker funds are designed to offer investors cost-efficient exposure to an entire index. To the extent that a share is in the benchmark, it will be in the portfolio unless the client specifically says not to. The PIC publishes its proxy voting record on its website.
Can I ask some questions? Just follow-up questions there. Can we please go back to the diagram? I think it's figure 2. You got that, yeah? And then the heading says PIC has largely delivered good performance over time. Is that what you're saying there on the diagram?
Yes, it was an observation, and Chair, through Chair, yes, it was an observation that I was making based on really a snapshot to 31st March 2018.
So are you saying across all the 5 big clients that the PIC has broadly done well for the clients over 10 5-year periods and all that? Is that what you're saying?
What I'm saying through you, Mr. Chair, is that when you compare the performance or the returns against the benchmark, you will see that a number of the bars are above the line, which suggests that there has been above benchmark performance. And where the bars are below the line, the underperformance seems largely marginal. So the performance has been in line or above the prescribed benchmarks for this snapshot of performance.
And then the next one is on 55 paragraph, and the second one, you know, can you explain tracker funds in many ways and how one cannot really tamper with them broadly, and that the performance of the stock market, as you say, is very important for the PIC. And if the market performs, they will perform. If the market doesn't perform, they won't perform. Can you just explain that a bit?
Through you, Chair, a tracker fund is a fund that follows an index. And the idea is to replicate the return of the index. When you follow a passive or index tracking approach, the idea is the client must first select an index. So it is known as being passive, but actually there are a few active decisions that need to be taken. For example, which index to track. When you track an index, then the asset manager does not have latitude to remove a certain stock from the index, unless the client specifically says, I do not want this particular stock in this index. So they will track the index as it is constituted and aim to adjust the portfolio as the provider of the index makes changes to the index, because sometimes stocks will come into the index or fall out of the index depending on the rules of the index provider.
Just to follow up there, isn't it true that the stock market over the past 3 to 5 years hasn't done well, really? And And is that true, first, as a question, and what you are thinking about going forward, given the investment strategy of the PIC?
Through you, Chair, it is true that the market, certainly over the last 2 years, has been under some pressure. Investments experts who opine on the future suggest that the markets are likely to perhaps not be as strong as they have been in the past. So there is that risk, understanding that no one really knows the future, but there are those concerns that we might not be able to see the performance that we have seen in the past. Maybe just to clarify, when you invest in an index tracker, it means that if the markets go up, you go up with the markets. If the markets go down, you go down with the markets. But importantly, it is a cost-effective way of investing. And if one does not have the skill to select the right active asset managers, it is certainly an option to invest this way, and one that many investors, particularly in the developed world, are looking at and pursue.
Thank you.
Chairman, index tracking is widely employed by some of the largest investors across the globe. For example, BlackRock, which is the largest money manager in the world, makes use of index tracking as a part of their core offering. Other examples include the likes of the Norwegian Sovereign Wealth Fund, the world's largest sovereign wealth fund, and Satrix in South Africa. The PIC team outsources most of the, the PIC team outsources part of the local assets to external managers using a specialist multi-managed approach. Multi-management is higher maintenance to build and design than a fully passive approach. It requires clear processes for manager research and selection, portfolio construction, monitoring, and review. The due diligence process incorporates environmental, social governance, risk, and legal assessments. The managers are appointed through a request for proposal process. The PIC then selects managers and creates a reserve list of managers that is researched and monitored regularly. This enables the PIC to act quickly should the need for a manager change arise. The selected managers manage their respective portfolios on an active basis, relying on analytical research, forecasts, judgment, and experience in making their investment decisions. This type of investing has a specific goal of outperforming a designated benchmark index or target return, and therefore comes at a higher cost. The offshore equities are currently managed passively, although the GEPF mandate allows the PIC to invest in different investment strategies. The fund has a modest allocation to offshore assets in comparison to other FSCA-regulated funds that can invest up to 30% outside of South Africa. The global portfolio has an 80% allocation to developed markets and 20% to emerging markets. The offshore bonds have a 70% allocation that is passively managed, with 30% allocated to actively managed strategies.
Can I just stop you there, please, and talk about 62 and 63 paragraphs? In terms of the global portfolio that the PIC has given to BlackRock and in index funds, do you think that's the correct way for the PIC to invest at this current point, or they could be doing something different?
Through you, Chairman, it's a difficult question for me to ask because a lot of the way the PIC should invest is probably driven by the client mandates and the client direction, in addition to their investment beliefs. the allocation is that to global is about 5% in the case of the GEPF. And therefore, as a start, you know, the PIC seems to have elected to apply a passive approach. It was mentioned at the workshop that they certainly hope to consider other ways of investing the global assets. So maybe it's a question of time, but I speculate.
Just to follow up again, we spoke with COSATU yesterday about the conundrum of global investing versus local. Do you have any views about that, especially given that the PIC is like 5% at the moment, but they've allocated 10%, you know? Do you have any views about how this could evolve?
Through you, Chair. The decision around an asset allocation is shaped by the objectives of the fund, the liabilities that they're trying to meet. So, as an outsider, it is not clear to me whether the allocation the current allocation to global is a function of wetting your toe in the global space or directed by a particular investment objective and liability. As such, I really cannot comment whether it is too high or too low. However, what I will say is that other FSCA regulated funds are allowed to invest 25% globally and an additional 5% in Africa. The PIC's clients, therefore, are essentially the fortunes of that fund are very much shaped by a single geography. So with the bulk of the assets managed in South Africa, one could say that there is little geographic diversification.
Okay, thank you.
Advocate Lieber, I'm not sure whether we are being chased out of this venue. One of my colleagues complained of it being cold earlier. I don't know what's happening now. It seems to me that something has been raised.
Mr. Commissioner, I've already requested that they switch off the fridge. We'd prefer to have it without air conditioning.
Thank you.
Chairman, with respect to unlisted investments, the PIC, given its scale, has significant influence in the private equity, infrastructure, direct property, and impact investment arenas in South Africa and the rest of Africa by virtue of being an important source of risk capital, given its scale. Indeed, the PIC is frequently the first investor to fund new investment arenas. For example, the Renewable Energy IPP program, where the PIC's early efforts were important in catalyzing significant local and international investor participation in the renewable energy sector. The rationale for investing in unlisted assets makes sense for several reasons. For diversification benefits and improving client risk-adjusted returns, to gain access to opportunities to invest in economic sectors not accessible through listed investments, to target sectors and opportunities that contribute and stimulate economic growth. Further, it affords crowding in ahead of and alongside other investors to support development investment opportunities that would otherwise not attract public market funding. Unlisted property also provides diversification and has qualities that can enhance the returns of a diversified portfolio. It delivers social impact as it, 1, promotes enterprise development, 2, supports targeted preferential procurement, and 3, creates employment. With respect to private equity, The corporation has a long history of investing in fund of funds, a strategy that invests money in portfolios of individual private equity managers. Having made 18 different investments totaling 5 billion rand over 13 years without any loss of capital. In 2011, the PIC started direct investment in private equity. The PIC uses a long, complex allocation and approval process, and it was observed by participants that this may limit the corporation's ability to compete for prime assets in the market. The PIC's ability to make direct private equity transactions in South Africa and the rest of Africa has come into public scrutiny following a number of contentious transactions recently brought to light at the PIC Commission of Inquiry. In particular, internal governance and investment decision-making structures that have enabled financing of non-commercial deals, as well as the corporation's internal structure and limited or stretched capacity to evaluate, make, and monitor direct unlisted investments raise concerns. Capacity constraints within the PIC were identified as an area of weakness which led on occasion to governance processes being compromised. Best practice lessons.
Can I just ask, can I just take you back to multi-management? I think it's in 59 paragraph.
Yes.
Yeah. Can you just explain that further? As we know that the PIC has got managers, BEE managers and others, like BlackRock and the other people. How would you structure a multi-manager? Are you happy with the way the PIC has structured its multi-management function broadly in terms of those BEE managers and the others, Coronation, BlackRock, Robeco and others?
Through you, Chair. I think in principle, the presentation that was made at the workshop showed that there is a definite philosophy around multi-management, looking to blend different styles of investment into a portfolio that can outperform a benchmark. They followed a process of manager selection, manager research, manager selection, portfolio construction, and monitoring, which are the big four elements that you'd find in any other multi-manager. So without express knowledge of their day-to-day processes, I can say at a high level that the basic principles of multi-management appear to be present in what they do.
Okay, thank you.
Various presenters at the inquiry workshop shared best practice lessons in unlisted investments, private equity, direct property, black economic funding, ESG, investing in African markets outside of South Africa. Summary insights on best practices in investing in unlisted investments. Industry practice shared at the workshop demonstrated a far more flexible and decentralized approach to investment decision-making at large asset management firms compared to the PIC. There was an emphasis on creating environments that encouraged risk-taking and that do not only evaluate outcomes, but also carefully weigh the processes undertaken. Summarized below are best practices in unlisted investing drawn from the presentations shared at the inquiry workshop. The board has overall responsibility over governance, policies, and oversight, but plays no direct role in investment decision-making, which is decentralized to respective investment committees in recognition that different skill sets are required for listed, unlisted, and multi-manager investments. A key principle.
This is a big one because, and I'm sure I see it comes up in the operating model. This is a big one because you are saying that the board of the PIC and the investment committee shouldn't be involved in making investment decisions. Is that what you're saying?
Through you, Chair. I think what came through in the workshop was a view that in order to benefit from the expertise, depth within the entity, in order to be able to execute with speed, that there was a place for the board to play an oversight role and rather let a team that has the depth, the knowledge, the time to be able to focus on the investment questions. There was also a view that there you'd be able to find deeper skill sets, and the recognition that actually this is quite a complex problem because each of the various mandates, whether it is listed, unlisted, or multi-management, require different approaches and skills to be able to execute.
Yeah. So am I hearing you saying that investment decisions should be taken at various unit levels and the IC and the board really is for oversight role?
Yes, through you, Chair. The work needs to take place within the team where there's the capacity, the time, and the focus, and the proximity to the transactions. The investment committee is where the decisions would be made. And the CIO or head of investments would be able to then report what is going on in totality across the business on investments so that the board is kept appraised.
Okay, all right. Okay, thank you.
2, a key principle of investing is to define a framework which sets and allocates responsibilities to the right levels and groups, and which identifies how much and which risks to take. 3, hiring top talent gives the firm a competitive edge. It is important to have the appropriate team composition and culture, a combination of youth and experience, proven professionals with market experience, networks, reputations, and with the right investment, operational, and industry skills. The staffing levels of the business are a function of the complexity and the size of the organization. 4, deal origination, deal review, and deal proposals should be undertaken by the investment team. 5, all transactions, including Black economic empowerment funding, need to be evaluated on their own merits and only undertaken when the underlying economics and other key consistently applied deal criteria make sense. 6, a clear alignment of interests whereby investment professionals are invested in the funds that they make decisions on is critical for success in private equity. End-to-end ownership of transactions from origination to eventual exit and a high level of deferred compensation with gains booked over time is typical. Private equity funds have to make an appropriate return in excess of the targeted hurdle rates for clients before they can earn performance fees.
Questions? Yeah. Can I just take you back to just 74? Just a question there. Within the PIC, you had, you got the CEO, CFO, and the other executives sitting and making investment decisions. How does this compare with other big houses in terms of that?
Through you, Chair, this was unique. In other houses, and certainly outside, within the workshop, it was clear that the CEO had a business function and the CIO had an investment function.
Yeah, so are you saying that then the CEO shouldn't be making investment decisions at all?
Through you, Chair, that's correct.
Thank you.
Investing in Africa. To harness the growth opportunities in other African markets, a localized approach and perspective in key focus countries is crucial, as the best quality deal flow often requires local relationships in respective markets. In this regard, boots on the ground are important for anyone determined to invest on the continent. 2, building trusted partnerships to gain access to new markets through co-investment opportunities, staff secondment opportunities, deal referrals is an alternative route to tap into the African opportunity. It's important to understand the macroeconomic risks and to establish the viability of the market and consumer growth in order to assess investment opportunities. Careful selection of strategy, markets, sectors, and deal size is critical to success. A focus on proven businesses with adequate scale and a deep knowledge of the management team is key. Early stage investments must show a clear path to profitability before consideration. 5, investing in management that are strong operationally and who embrace innovation is a big driver of successful outcomes. 6, in private equity, growing the management for the different stages of the business, hiring well, setting incentives based on a strategic plan is important. This fosters the growth and maturity of consistent value-added activities in portfolio companies. For example, the development of operations or management information systems or governance in portfolio companies. 7, it's important to manage currency volatility to protect the value of investments made by seeking to naturally hedge with dollar-based sales and actively monitoring currency assumptions throughout the period of investment. Key measures of...
Question here on this section. On the continent, apparently there's a lot of companies that are not huge. You know, the continent doesn't have large companies with $100 million of revenues or market cap, and hence investors look at entrepreneurs also. The PIC invested in a company called SNS, refinery in Mozambique. And here you are mentioning that the PIC should put money in profitable, sort of well-managed companies. How would you sort of juxtapose that position of saying that there are not many huge companies on the continent and there are entrepreneurial companies, but the PIC has suffered a bit on that score? How should it go forward in terms of investment, if you can give us some light there?
Through you, Chair, that's not an area that I can really weigh in on, except to say that at the workshop, the individuals who spoke about the African opportunity were excited about the African opportunity. They talked about urbanization, the growth on the continent, a burgeoning youth population. So there is opportunity. But they also said that one has to go in with their eyes wide open, and really reiterated the point about the selection of your strategy, the markets, the sectors, and deal size. And importantly, the idea that you must, the selection of companies must be either viable businesses or those that are actually on a clear path to profitability. So the kind of due diligence required is certainly one that needs to be fairly deep and perhaps also drawing on a sense of local expertise.
Then, if you look at Roman figure 4,
Yes.
all right, are you saying that the PIC should actually be having a list of its target companies? I mean, it shouldn't get a deal from some people and say there's a deal here in Mozambique, there's a deal in Ghana, or whatever. The PIC should actually do the due diligence and identify the opportunities to invest in broadly, or you are saying it can be a haphazard process?
Through you, Chair, how the PIC elects to invest in Africa is clearly a matter for the PIC to consider. But there are different ways with which you can invest on the continent, and that came through very clearly. You can have a representative office, you can have a board or an investment committee with people with broad African, Pan-African experience. You can have partnerships, you can co-invest. So there were many options that were put on the table to access the African opportunity. And I think it would be a question for the management of the PIC to see which best suits their organizational structure and framework. Key measures for ESG integration. As the largest single investor in public markets, the PIC's policies around corporate governance and shareholder engagements give the corporation significant influence and import in the South African market. Key recommendations made include for the PIC to, 1, build internal capacity and collaborate with other investors to share expertise and gain broader adoption. 2, set clear priorities and ensure alignment of ESG investment guidelines with internal and external portfolio management. In addition, monitor and evaluate progress. African direct property. The African direct property market offers investors an opportunity for higher return at higher risk, and it is important to understand the different market dynamics. The direct property market is highly illiquid. Low secondary trading means that there is poor price discovery. In addition, a significant amount of work is required to establish ownership and title. Key recommendations here were, 1, to mitigate risks, an experienced team and a presence on the ground is required. 2, investors need to determine the right approach in each market and buy carefully. It's important to tailor the approach to the type and size of project and have the requisite property development, property management, and fund management skills, which can be in-house or outsourced. PIC operating model. There are many proven global and local business models for large, publicly owned or oriented investors like the PIC.
Sorry, can I just take you back, sorry to interrupt you, can I please take you back to paragraph 76, ESG?
Yes.
Yes. It seems that there's a huge problem about local companies, to adopt these processes. And we had the JSC here, Nikki Newton-King, talking about how the JSC will start pushing on that front. ESG, I mean, do you think this is quite an important area? And how can we, as a consultant, I mean, how can we push this process along?
Through you, Chair, ESG is an important area and has been a topic of conversation for a number of years. In South Africa, you've got organizations like the CRISA, that asset managers and pension funds participate actively to engage on matters around how to implement ESG policies within funds as asset owners and as asset managers. The PIC has been active in this space, and at different times has perhaps, looking from the outside in, had different ways of engaging with the market, sometimes more visibly in the press, but certainly they reiterated at the workshop, always behind the scenes, to get certain of their views made known to the companies that they own. So it's an important aspect, and one which is very much on the agenda even from a regulatory perspective, because pension funds are required to consider ESG and have an ESG policy as part of their investment policy documents.
Thank you.
Any model must be relevant for the PIC's size, current and future needs, complexity of its mandates, and for the South African context. Irrespective of the business model, the key success factors are, among others, the right leadership, clear governance structure, integrity, a clearly articulated and consistently applied strategic framework and investment processes, and a strong culture that underpins the various mandates of the organization and embodies its public-facing responsibilities. The PIC is in the process of reviewing its operating structure, and internal discussions are underway to determine what operating model to adopt. Currently under consideration is a business unit structure versus a holding company or subsidiary company structure. The table 4, shows the advantages or disadvantages of decentralized model, which I will take for noting. In figure 3 and figure 4, there is a picture of the current operating model, and figure 4 talks to the reorganization of the current thinking and the proposed model once the entity reorganizes itself, and I'll take that for noting. It is discussed in the report.
I'm sorry to interrupt you. You say that the PIC is presently in the process of reviewing its operating structure, and internal discussions are underway to determine what operating model to adopt. Unfortunately, we are faced with a situation at the moment that there is, for all practical purposes, no board in place at the PIC. There's an acting CEO, there's an acting CFO. I don't know how many acting positions. Should it be better for the institution to await this review till they have at least an interim board in place and stability in the management structures?
Through you, Chair, I think that's a very important point to make. This is a very important decision, a decision that needs to be taken very carefully, given that it is looking at future needs and dealing with the complexities of an organization with multiple stakeholders. And it certainly needs the board that will take it forward, the executive that will take it forward, to be in place to deal with. It's a very, very important issue.
Can I just dwell a bit on these two diagrams? All right, the first one, you call it figure 3, isn't it?
Yes.
Yeah. I mean, it appears that the PIC is about 5 companies in one, really. When you look at real estate, you got it is almost as big as Growth Point, yeah? And then you look at private equity, it's quite huge. I mean, it's bigger than Braid and Ethos. Impact investing is more like the IDC, yeah? And tell me if I'm wrong or right, you know, so, and then fixed income, I think, as we know, fixed income is that old mutual company, the big one is called Future Growth. And then the listed equities, it could be as big as Coronation or Investec Asset Management. I mean, this is a beast. It's company, you can have like 5 companies within the PIC. Is that correct?
Through you, Chair, the PIC blows my mind. It's a big entity. And then
get closer to the mic, yeah, get closer to the mic.
Through you, Chair, the PIC is a big entity. And yes, it's a very important entity. You could easily put each one of those companies that you mentioned inside the PIC, and that's, you know, and it would more than cover those entities. So yes, it is perhaps worthwhile taking a moment just to reflect on that.
So meaning that a company of that nature, do you think it can be managed centrally as it has been done by the PIC currently and all that? I mean, with such huge, different business model, different companies, being such a huge corporation, that it can be managed centrally?
Through you, Chair, I think in the context of the workshop, the issues of governance, the issues of implementation that were raised suggest that a centralized model is not one that can work. And I think when one looks at other examples that were presented at the workshop, big entities rely on decentralized models so that decisions can be made closer to where they need to be made so that there are no bottlenecks.
Let's go to the next diagram, just to put some effort there. This is what the slide from the PIC that they're looking at a new structure and sort of breaking it down into 3 business clusters or 3 clusters. And would you think that the way they're looking at it, and I think, as they say, there's a PwC report which they're looking at, putting assets listed ones in one cluster and putting unlisted in another cluster and private equity, and then an infrastructure and real estate in another cluster. Would that sort of work in terms of sort of decentralizing the investment decision making?
Through you, Chair, certainly each of those areas that they have shown in the 3 clusters have different time horizons, illiquidity, or liquidity constraints, and it would certainly make that they also would be structured quite differently in terms of whether it's the remuneration in the different entities that might also come in as a factor. So it makes sense to have the different buckets. The one thing that stands out for me is the multi-management aspect of it seems to be missing, and that's quite different from a single asset management business, even if there are certain similarities.
Yes. So would you then add the 4th cluster called multi-management stroke funds of funds, maybe?
I think I would, through you, Chair.
You would add a 4th cluster or 4th business unit there?
I think to me it's a fairly distinct business
Yeah.
and merits a separate cluster. And when I look at industry experience, and there are many financial services groups that have multi-management businesses within them, it is typically a separate unit.
Thank you. Thank you very much.
Chairman?
Chair,
Yeah.
sorry, I'm sorry to interrupt. Chair, can I perhaps propose that we have all had the benefit of the statement in advance, and there are these diagrams, and that we can consider it to be read, and unless there are specific questions on some of those
Yeah.
diagrams.
The ones, if I want to refer, I will charge you. Yeah. I just
think-
want,
Yeah, sorry.
Advocate, yeah. Before we move from the diagrams, the one diagram I just want to raise is on the governance structure, the board. And please answer me if you can. The audit and the risk committee, where is it? Yeah, there it is. There was some talk that it needs to be separate because the risks at the PIC are so huge, and the audit is a different thing too. Do you think, if you look at various companies that you have worked with, do you think there's a need to separate these two functions?
Through you, Chair, a lot of the issues around the structuring of committees, I think, must be driven by the internal considerations. I would, however, just speculate here that perhaps one of the reasons why there was so much work in the risk committee is if all investment risks were also being channeled to the board as opposed to being in the purview of the investment committee and the investment teams, that might be one reason why one could talk about the excess workload in that particular committee. But there is certainly a move in certain firms to separate those two areas to ensure that each of those very important areas get the time and level of discussion that is required.
Yeah, so you are saying that there should be risk people within the clusters, the business units, and then have also company-wide risks at the top.
Through you, Chair. This was discussed at the workshop, and a number of companies who were there talked about a structure where they have a chief risk officer that looks at enterprise risk. So things like the risk in strategy, legal, operations,
IT,
cybersecurity, that kind of thing. And that was different from the investment risk, which is then discussed within the investment committee, within the investment teams. So there was a very clear distinction between the risks as they pertain to investments and the risks as they pertain to the overall entity.
Thank you. Thank you.
Chairman, the proposals outlined below for consideration cover areas where the current practice should be reviewed so as to ensure the success and sustainability of the PIC into the future. Of critical importance is to create an environment that gives the PIC the best possible conditions for successful discharge of its client and shareholder mandate.
Now, what are we dealing with here? Is it your view from here onwards, or is it still coming out of the workshop?
Chairman, this is coming out of the workshop. There's one place where I added to an observation that was made for clarity, and I can point that out when I get there. But
Please
this
do so.
is predominantly from the workshop. Board composition. The board shall encompass the right expertise required to play an effective oversight role, including actuarial, asset management, general business, legal, audit, and risk expertise that can advise on investment-related issues. It should have broad competence in asset management and business. As the PIC is a global investor and asset management is a global industry, the board should include individuals that bring global investment industry experience and perspective. Further, the board should have appropriate representation of key stakeholders, such as key clients and trade union representatives, who also meet the minimum board competency requirements.
So,
Can you, no, Advocate Lubia, go, you can go. You can go.
so I understand you correctly. This ties in with the presentation we had yesterday from Kusatu, that the workshop was in favor of trade union representation on the board.
Through you, Chair. The workshop, when it talked to this point, made reference to the current bill, which I understand from the discussion weighs in on this matter to suggest that there should be broader representation of these stakeholders.
Thank you.
Yeah, and here, there is no, you don't think there's any issues? I mean, it's as long as they pass that FIS Act competencies, because the Act says, the PIC Act says you should appoint the board subject to the FIS Act requirements. Is that correct?
Through you, Chair. This is an interesting one, and I talk here having read very briefly yesterday an article of the discussions that were had, and also with recollection of the workshop, where it seems to me, and I'm now expressing a view, that this representation is partly driven by a situation where there are concerns that as stakeholders, the PIC may not be executing on its mandate as they would expect. So it seems to me an issue of trust here that is perhaps propelling this interest to want to sit on the board. And it did come through in the workshop from one of the conversations that if there was greater comfort on governance matters, then this might not necessarily be required.
Don't you think, and this came up during the COSATU sort of presentation, don't you think besides the board representation, say besides that, don't you think creating a proper institutional structure is even much more greater thing, in the sense that processes, checks and balances, proper client mandating processes and all that, those would be more long-lasting and more proper in terms of the institutional structure, like the one we have in the country about the constitutional court, the parliament, and where you got serious checks and balances in this whole ecosystem of the GEPF and the PIC.
Through you, Chair, I'm not able to comment on perhaps the deeper thinking around this requirement amongst other stakeholders. But certainly in the inquiry workshop, the thinking is around governance, operating models, transparency, capacitating an organization, those certainly would, if implemented, would have far-reaching impact on the success of this very unique institution.
Thank you.
Mr. Commissioner, if I can just make a general observation, and I do this with no disrespect to the witness or Mr. Lediga, but I think we're moving into a dangerous terrain by asking the witness to express an expert opinion on certain matters that were discussed at the workshop. I thought that the function of the witness was to come and report on the workshop. And I think we should just be careful not to place the witness in a very difficult situation to express expert opinion, although I'm not saying she's not an expert at all. But the function, as I understood it, is to come and report on the workshop.
No, I think I mentioned earlier, not here, but in the room where we sit, that I don't think there would be anything wrong in asking the witness. To me, on reading the statement and the report, it appeared that she is highly knowledgeable on these issues. And I felt that there would be nothing wrong in asking, but what's your own view on a particular issue? I'm mindful of the fact that in a court of law, that would obviously not be allowed because there should be expert notices and so forth. But here, I think the position is a little bit different.
Mr. Commissioner, I fully agree. And obviously, if she can be of assistance, and on the questions asked by Mr. Lediga on certain aspects that can assist the Commission, it's fine. I'm just making a general remark. And I mean, the terms of reference is wide. We can even lead hearsay evidence. But I just don't want to put the witness in a different or in a difficult situation.
The position I understand. You see, that's why earlier I sort of asked, are these your views now, or we're still dealing with the workshop? Because I want to distinguish between what was said in the workshop and what are her own views.
And just to add, Advocate Lube, we did ask whether we can ask as an expert, and I always say if she wants to answer, she can answer, and if she cannot, she cannot.
No, I fully understand that. It was just a general observation, and I think she's obviously well versed in these things to say to the Commission, this is not my field of expertise, I can't help you.
Yeah, she can do that, yeah. You can continue.
Chairman, an independent PIC board chairman with a significant background and demonstrable track record in investments or business, rather than an ex officio chairperson, was proposed by the participants. The appointment of board members should in future reside with the Board Nominations Committee of the PIC. Board terms should be staggered, defined in term and duration, and key board committees and composition clearly codified.
Sorry, can I just again perhaps just ask that this is a board proposal, it can't be should. This is something that is a consideration, that is a view from the workshop. It is not something that there is a decision-making process. So although it's written in that word should, and later you come to it shall be, I think it just should be taken into account that these are not decisions. This is a report that we will consider. So these are views of the workshop rather than decisions. And as long as that's clear into the record that these are not instructions or positions that have been adopted, this is a view of the workshop of what it thinks would be the most appropriate way of dealing with it, which we will then consider.
Through you, Chair, thank you. I just didn't know how to write some of this, but thank
No,
you.
it's fine, because if we put that into the approach, you read it as it is, there's not a problem, as long as that is the understanding of how we're receiving this.
Through you, Chair, that is very much the understanding. I'm just reporting the views that came through. Thank you. In the current unique situation, it's recommended that the chairman, in consultation with the new CEO and Minister of Finance, work together to create the new board. Executive.
Coming again there, so, and you are aware that the current board is chosen by the minister, maybe in consultation with cabinet, but here you are saying that paragraph 87 that actually should be, suggestions are that the minister, together with the new CEO, with the CEO or whatever, and the chair, they must select the board.
Through you, Chair, that is what was
Was said.
said in the meeting.
Yeah.
And of course, in this unique situation, that's where I place emphasis. In this unique situation, it doesn't mean that the suggestion is that should be the position into eternity.
Chairman, that's correct.
But if I may add to that, Commissioner, that recommendation would also entail having an amendment to the Act, where the Act at the moment states that the board is appointed by the Minister in consultation with the Cabinet.
Thank you. Yeah, you can.
Chairman, executive roles, separate the CEO and CIO roles. From an administrative perspective, the CIO reports to the CEO. However, the CIO retains direct responsibility for the investment functions. There must be a clear separation of business issues, for example, administration, operations, stakeholder engagement, from investment allocation issues. This separation must exist in theory and be rigorously and consistently applied in practice. Appoint a Chief Operating Officer to free up the CEO from operational responsibilities and allow the CEO to focus on the overall strategy and external stakeholder management. The CEO, and by extension the senior management, should exemplify the PIC's values that put clients first and align the interests of the organization with the client. Appoint a Chief Risk Officer to focus on the corporation's overall risk profile and report directly to the Risk Committee of the Board. Risk and compliance functions should report to the CRO.
Question? Yeah, question here. And I don't know if it came up, but paragraph 90, if you got the COO, say, and the CIO and the CEO, is there a role for an executive committee? Because at the moment, the PIC has got an executive committee. And would there be a role for such a function?
Through you, Chair.
If you can answer, yeah.
Through you, Chair. Certain matters are obviously for the PIC to decide. I can, however, say that when one looks at industry experience, that C-suite would often have an executive committee where they deal with certain matters, particularly around strategy and the overall health of the business.
But it's not necessary, would that necessarily be a decision-making committee or more of a sitting together to explain where each division is going to and all that?
Certainly, it's a decision-making committee because the CEO, as the leader of the organization, as a collective, they need to make certain decisions around how to do things in the business. That is what they are there for. So they have to make decisions.
Thank you.
Remuneration. Implement variable remuneration that is linked to individual and team performance, as well as overall contribution to achieving client and firm objectives subject to profitability and growth. Ensure alignment of incentive structures, e.g., appropriate key performance indicators at each level, meaningful deferred compensation as a percentage of total compensation with a long vesting period, ability to claw back compensation in the event of inappropriate behavior, gross incompetence, etc. Emphasize non-financial benefits that the organization offers, such as the ability to influence markets, broad scope of learning possibilities, and an opportunity to make a meaningful difference in South Africa that can help attract and retain quality staff. The PIC halo should be a key draw card, and the corporation should position itself and demonstrate to potential candidates that it is the place to either have or launch a successful career in asset management in South Africa. Chair?
Yeah, okay.
Maybe just to say, this was a view that I held, that the PIC can actually be an employer of choice, but when I did this, my thinking was that they might not always be able to compete with other entities who might be able to offer long-term incentives based on listed shares, for example. And therefore, there's a part of working in this organization that might entail being satisfied with the non-financial benefits of the organization.
Just a question. I think it was Chris Polwani who talked about this, that the PIC pays people at the 75th percentile or something like that. I think human resources is there. I mean, working at the PIC is a unique thing. So do you have any views about, is that percentile correct one, or it could be sort of a reasonable amount besides the bonus issue, the short-term incentives and long-term incentives, which is a separate matter because there's an issue which has been dealt with there?
Through the chair, I don't have a view on that. Investment governance and structure. The board's role shall be restricted to an oversight role for the PIC and ensuring that the overall strategic and governance frameworks are in place. The board is responsible for ensuring the right policies are in place and that the investment processes and governance structures are respected and consistently applied. The investment committee shall be solely responsible for approving all investment opportunities relating to client assets. All investment decisions of the investment committee are binding. The PIC should put in place clear rules that govern the composition of the investment committee, its tenure, and process for onboarding new members. The PIC should appoint a CIO or head of investments that has oversight over the different investment mandates, broader propositions, and overall accountability by ensuring that the PIC delivers on its client mandates within the articulated risk parameters. The PIC should appoint experienced senior investment professionals reporting to the CIO to head up the listed, unlisted, and multi-manager areas, as different skill sets are required for each. Each area should have decision-making authority in order to allow for timely decision-making. There should be an identifiable person or persons with whom accountability rests at each decision-making stage. There should be clear set of performance metrics for the CIO and his direct reports with an incentive structure that aligns and underpins the key PIC objectives. Outsourcing investments. The experience of other sophisticated global investors shows that getting access to the best people opportunities and ideas matters significantly more to investment performance and is more efficient than building out an investment capability in all areas. Investment committee composition. The investment committee must include a majority of independent, competent individuals with deep investment knowledge and integrity that understand their fiduciary roles. The IC chairperson shall be independent. The IC should include a mix of asset specialists with deep domain knowledge as well as generalists with expertise that cuts across sectors in order to evaluate opportunities and appropriate correlation of asset class returns and risks. Individuals should have at least 10 years experience in core domain expertise and ideally with portfolio management experience across the business cycles, that is, bull or bear markets. Based on global best practice, it is recommended that the IC be comprised of 5 to 9 members. This will ensure both requisite broad-ranging experience, that is, investing, risk, regulatory, and compliance, is present without compromising the quality and pace of decision-making. Diversity of experience, opinions, and views are important to the quality of decision-making. Transparency and reporting. Transparency is important to managing and bolstering public trust and confidence. Public funds have to be well governed because they have the potential to strengthen or destroy public trust in important public institutions. This is established foremost by an active public reporting stance. The PIC should consider providing greater disclosure of investments without jeopardizing deals on a public register to promote transparency and build trust. The CIO shall provide a quarterly investment letter to the board and potentially other key stakeholders, representatives, for example, Minister of Finance, National Treasury, members of the public, that will enumerate key holdings, rationales, absolute and relative performance, investment outlook, and any material changes to the PIC or its mandates. This can have a valuable stakeholder education role and help build trust. Chair, this was an idea that I thought could help, so I just flag it. The PIC shall provide client reporting in accordance with the investment mandate requirements that specifies risk-taking strategy, performance objectives, evaluation horizon, reporting frequency, etc.
Can I, just a question on 109, paragraph 109. Isn't it that unit trusts report on a quarterly basis? You know, if you are an investor in unit trusts, you can actually see the investments and the processes on a quarterly basis, and maybe this could be in keeping. Yeah.
Through you, Chair, that is correct. Global benchmarking. So Table 5 below gives a comparison against the sovereign wealth fund, asset manager, and 2 pension funds. And this came through the work of various presenters, and I decided to summarize it into a table just so that certain things could pop up. The detail is actually in the report.
Yes, what I want you please to lift out of this and emphasize is if you look at management fees, if you can just please deal with that.
Through you, Chair. So if one looks at the management fees, and bear in mind that this was in conversation, so this is picked up, particularly the fees here shown for the PIC. In the conversation, it was mentioned that the fees that they charge are 3 to 5 cents per 100. And you can see the comparators are shown there. Now, the Norwegian fund, which is a passive fund, talked about 5 to 6 cents per 100. They don't use the full 6 cents, but they are allowed to charge in that ballpark. CalPERS, there was a presentation that showed their fees to be 61.2 cents per 100. CPPIB, which is a Canadian fund, asset manager, 32.8 cents per 100. And the Ontario's Teachers Plan, 67 cents per 100. So you can see here that what comes through, because index tracking is a cost-effective, lower-cost approach to managing assets, and you can see that PIC compares to the Norwegian sovereign fund that is also managed largely using an index tracking approach. But I think this is an important point to just understand, because it goes to the ability of this organization to be able to structure or reorganize itself in a certain manner, because it needs the revenues to be able to meet its expenses and to be able to generate a profit, for example, to invest in the business, whether it is in systems where it was acknowledged, for example, that there are a lot of manual processes. This is a key figure and ties in very closely to the idea of what is the future operating model of this entity.
Can you, on the same, can you please just do this line on the board chair, how the global benchmarking goes on there?
Through you, Chair. So if one looks at the table, currently the practice in the PIC is the Deputy Minister of Finance. If one compares it to the Norwegian Sovereign Fund, there the board chair is the governor of the central bank. Now the asset management activities in the Norwegian fund are housed in the central bank because it is deemed to be one of the most independent institutions in that country, and therefore the view expressed by the presenter was that it's a way of shielding that entity when you put it into the central bank. CalPERS and the Ontario's Teachers Pension Plan, OTTP, those are pension funds, and they have a different governance framework where there's a board of trustees, and within that board they will select amongst themselves either an investment committee or the entire board is the investment committee. So, you know, it's a very different governance framework. CPPIB is a fund in the Canadian context, where again you will see, and these funds have a certain similarity about them in that they are public oriented funds. The chair of the board is appointed by the minister after consultation with the board.
Who decides the management fee? The entity itself, or is that a directive from somewhere?
Through you, Chair. So, in the private sector, they might come up with a proposition, and they will price the proposition, maybe taking into account industry benchmarks for that kind of a proposition, whether the proposition requires active management, where there's, you know, maybe more investment in a team of researchers who can then look for, you know, select stocks, for example, that would be more expensive than just purely tracking a fund. Now, in the context of the PIC, it's not immediately clear to me how they do it. I do know, having read some of the historic documents, that in 1986 they were allowed to, for the first time, recover their costs from their clients. Now, how that has evolved since then, and particularly after the corporatization of the entity, is not clear to me.
The final question from me is, let's go to paragraph 101. You went through this pretty fast. If you could just explain further in terms of saying, what are you saying in terms of the PIC being good at some things and then outsourcing some of the assets. Can you explain further there on 101?
Through you, Chair. The PIC is a big entity even by global standards. So at the presentation, there was some discussion to say, what do global investors do? And the one thing that comes through, and even I mention it in the table, is that there's a recognition that sometimes you cannot do everything in-house. You might not be able to do everything to a high standard in-house simply because it might be difficult to attract the talent that you need, or it is too time-consuming to put it together. And therefore, a number of global investors were cited. And essentially what some other investors are doing is recognizing that actually at the end of the day, what you're trying to do is get access to the best people, the best opportunities, the best ideas, and that matters more sometimes than trying to go through the effort of building the capacity yourself in-house.
Thank you. Thanks. I'm done.
Chair, thank you very much for your attention and for the opportunity.
Mr. Commissioner, can I perhaps also have a final word to say that I had the benefit of attending this workshop, which was quite a strange and new world for me to walk into. I was struck by the knowledge and the enthusiasm of the participants who came there and gave their time for free to assist this commission. They were thanked at the time, at the end of this workshop, by Mr. Letiga for their participation, but I think it would be only fair that this commission can also record its gratitude to all these people who came there and participated, and what resulted in the support that is handed in today to this commission.
Well, in the report there will be acknowledgements. I don't know whether you are suggesting maybe some correspondence to them, or would that be sufficient?
No, not at all. I think it would be, if there's in the report an acknowledgement, that would suffice.
I'm going to ask Mr. Letiga, since he had some activity in the workshop, to thank the witness.
It's a new role for me, Ms. Waume. Thank you very much for attending the workshop and for penning this good report. And also, I would like to thank the participants at the workshop who took their valuable time in a weekend for 3 full days, 3.5 days, sitting there without their families, and for putting together these best practices and ideas for the commission to look at, as it was clear that these are some ideas for us to look at. So thank you very much to you and to Tsepo Pule and Mark Davis, who were assisting you. And the statement and the report now is with the commission. And thank you very much also for your expert knowledge, and broadly for taking the time to come here and to assist the commission. So thank you very much.
Through you, Chair, it's been an honor.
I'm hoping that it won't be necessary to recall you, but if it becomes necessary, please make yourself available again.
Mr. Commissioner, thank you. That's the business for the day, and as explained to you yesterday also, because of late withdrawals and other logistical problems, I have no other option but to request a postponement till Monday at 10 o'clock.
Monday? That's Monday?
It's the 24th of June.
Yes, thank you. It appears that we have no option but to adjourn the commission until Monday the 24th at 10.